You need hundreds and hundreds of hours of experience to correctly identify structure and its breaks. In this video, I will prove the opposite to you. Reading structure and correctly marking a break doesn't require any special skills if you know the approach from this video and eliminate basic mistakes. I see two ways to work with structure. The static one, where you don't need to overthink or guess. All you need to do is follow a clear algorithm. This approach is better suited for those who are currently struggling with reading structure. And the second is working through a dynamic approach, where structure can be identified more precisely. This is for those who have mastered the static approach and want a deeper understanding of price movement. Thus, you will get a complete algorithm for reading structure. We will start with a basic understanding of structure, and then move on to the advanced method. To understand the algorithm of the static approach, we first need to define the key concepts. First, the structural elements. In a bullish structure, these will be the higher high and higher low. In a bearish structure, these will be the lower low and lower high. It is exactly with the help of these elements that we will determine a break or continuation of the structure. Second is internal liquidity. To identify structural elements, many often use inducement for this approach, but I won't overcomplicate things unnecessarily and will replace it with the universally understood fractal. The logic and algorithm won't suffer from this at all. The fractal will act as internal liquidity, meaning the liquidity between two structural elements. It's important to note that we will only consider those fractals after which the price broke the high or low with a body close, depending on the structure's direction. If we see the formation of a fractal after which the price did not break the high or low with a body close, we will not consider such a fractal when working with structure. The structural elements themselves are external liquidity. And third, pullbacks and structure breaks. A pullback is a counter-trend move that sweeps internal liquidity, meaning a fractal, but without the price closing beyond the structural element with a body. A break, on the other hand, is a pullback that closed beyond the structural element with a body, meaning it broke the structure. Here you might have a logical question. On which time frame are we looking for this body close? This question will be answered later in the video. For a structural element to form, the following conditions are important to us. First, we need to see a pullback that sweeps internal liquidity, meaning a fractal. After sweeping it, a higher high is formed in a bullish structure, and a lower low in a bearish one. A higher high and lower low do not form until we sweep at least some liquidity. The formation of a higher low will only occur after the price, in a bullish structure, breaks the higher high with a body close. Moreover, the higher low in this case will be considered the lowest point of the pullback. A lower high in a bearish structure is formed only after the price breaks the lower low and closes below it with a body, and it will be considered the highest point of the pullback. Please note, in a bullish structure, we first need to see the formation of a higher high, and only after the price breaks it with a body close is a higher low formed. In a bearish structure, we first need to see the formation of a lower low, and only after a body close below it is a lower high formed. Let's look at an example in a bullish structure. We immediately mark our higher low and higher high, as we see that after breaking the previous high with a body close, there was a sweep of internal liquidity. The continuation of the structural move and the formation of a new higher low will only be confirmed after breaking the higher high with a body close. Here we get a new higher low. A new higher high forms at this point, as we see a pullback with a sweep of internal liquidity. This higher high is broken with a body close, and we get a new higher low. Here again, we see the formation of a new higher high, as internal liquidity was swept. A new higher low formed after a body close beyond the higher high. Notice that this sweep will not lead to the formation of a higher high because we are not interested in this fractal. There was no body close above the high after it. A higher high is formed at this point, as there was a sweep of internal liquidity here. Breaking the higher high with a body close creates a new higher low. And once again, the exact same thing. A sweep of internal liquidity, a new higher high is formed, and after breaking it with a body close, a new higher low is formed. How to identify a break? We need to see a body close beyond the structural element, a higher low in a bullish structure, or a lower high in a bearish structure. In a bullish structure, we see our higher low as it swept liquidity and gave a body close above this higher high. Where will the break be in this case? A sweep or a close beyond internal liquidity is just a pullback. I also call it internal structure, meaning everything that sits between the structural elements. A break of structure occurs only after a price body closes beyond the higher low, on the exact same time frame where you previously analyzed the entire structural movement. In a bearish structure, the algorithm will be exactly the same. Only a body close beyond the lower high will be considered a break. Until the current lower high is broken, the structure will remain bearish. To identify a break of structure when working on a lower time frame, I don't wait for a structural element to break. Most often, it is located far from your point of interest, meaning by the time the break happens, the price might already be too far away to look for a setup entry. Therefore, for a lower time frame break when trading from a point of interest, people usually look at the very first internal liquidity, meaning the fractal. I draw your attention once again to the fact that we are only interested in a fractal after which the price gave a body close beyond the local high or low. Fractals without such a close will not be taken into consideration by me. After sweeping our point of interest, if we expect a reversal, we start looking for our break. Different time frames are used to look for a break, from the 1 minute to the 15 minute, whatever you prefer. After an Asian sweep, I see no point in going higher than the 5 minute. Here we see a sweep of the point of interest and a body close beyond the first fractal. This will be considered our break on the lower time frame. Pay attention once again to protect ourselves from fake breaks. We only choose fractals after which there was a body close beyond the local high or low. Also, if we are talking about the 3-minute or 1-minute time frame, some traders wait for additional confirmation of the start of an opposing structural lower time frame move after the break. Looking for a lower time frame model helps us get additional confirmation and ensure that after sweeping the point of interest, the price won't continue its rapid movement in the same direction. What are the downsides of the static approach? I see 3 main downsides, which you can see on the screen. They introduce a lot of problems when using the static approach in practice. How to fix these downsides will be covered next when breaking down the dynamic approach. If everything on the chart were like in the pictures, the static approach would be enough for us. But in reality, we very rarely see perfect structural movement. Reality will gift you a ton of fake breaks, consolidations, and prolonged moves without pullbacks. And to somehow handle these gifts, we need a more advanced approach. Having covered all the basics of working with structure, let's move on to the more advanced dynamic approach. Unlike the static one, there are no strict rules here. Everything will come down to your screen time and experience. To identify structural elements in the dynamic approach, let's break down my rules for working with it. To form a structural element, there doesn't necessarily have to be a liquidity sweep. I just need a correction. To determine the correction range, in a bullish structure, I will take the range from the higher low to the highest point of the structural move. In a bearish structure, I will take the range from the lower high to the lowest point of the structural move. If the pullback was short-term, I need to see a correction of at least 30%, or ideally 50%. If during the pullback there was a prolonged liquidity buildup or a consolidation started, then to form a structural element, the correction can be less than 30%. Everything that happens between structural elements will be considered internal structure for me and will have no impact on the structural elements. To form a higher high or lower low, my pullback requirements must be met. To form a higher low or lower high, I need to see my pullback requirements met and a body close beyond the higher high or lower low. I want to see a strong close, not just by a couple of pips. I won't drag it out, let's jump straight into practice. We see movement in a bullish structure and the formation of a higher low. This is the lowest point of the pullback after which there was a body close above the high. We see a correction of more than 50%, which means a higher high is formed at the top. After breaking it with a body close, a higher low is formed at the lowest point of the pullback. Again, we see a correction of more than 50% of the range, so a higher high is formed at the top. Notice that what happens between the current higher high and higher low is just internal structure. It does not create new structural elements. After a body close beyond the higher high, a higher low is formed at the lowest point of the pullback. In this move, we didn't sweep any internal liquidity. If working through the static approach, these structural elements would not have formed, which looks quite absurd, since the correction was over 50% and there was a prolonged liquidity buildup. Next, we again see a 50% correction, meaning the creation of a new higher high and the creation of a new higher low after a body close beyond it. The exact same thing happens in the next move. Correction, creation of a higher high, breaking it with a body close, creation of a new higher low. If you were looking at the situation further within the static approach, you would consider this high a higher high, as a fractal was swept, and this low a higher low, as there was a body close above the high. Within the dynamic approach, I will not mark this low as a structural element. The body close was extremely weak and brief. Next, we see a break of structure, as we get a close beyond the higher low, meaning a bearish structure begins. I won't consider this pullback as forming a new lower low and lower high, because it was a very small correction of just over 30%, and there was no liquidity buildup, no sweep of any pool or imbalance test. I want to see either a deeper pullback or a buildup. Again, the advantage of the dynamic approach. You can evaluate debatable situations based on experience and logic. Next, we see a more significant pullback with a correction of over 50%, as well as a liquidity sweep, which means a lower low forms at the bottom. But until the price breaks the lower low with a body close, it is still internal structure, meaning a lower high hasn't formed yet, and the pullback continues. We only got a close at this point, and only after that is a new lower high formed. After this, we see a correction of more than 50%, meaning a lower low is formed. Again, everything that happens between the lower high and lower low is internal structure. It doesn't create new structural elements. After a body close beyond the lower low, a new lower high appears at the top point of the pullback. Notice that according to the static approach, structural elements wouldn't have formed here, as we didn't sweep internal liquidity. Given that the pullback was over 50% and there was a prolonged liquidity buildup, this looks illogical. Here we also see a correction. Unlike the previous example, where the correction was also 30%, here it was prolonged with a sweep and buildup of liquidity. Therefore, I mark a new lower low at the bottom point, and a new lower high forms after breaking the lower low with a strong body close. Obviously, a structural move won't last forever, but how do we determine its target? You can never know the exact reversal point. You can only anticipate it. However, I highlight key points on the chart for myself that can provide a strong reaction due to their significance, like a break of structure and trend reversal, or simply a pullback. For a 1 hour or 4 hour structure, this would be a sweep of daily fractals, or a test or full fill of a daily imbalance. For structure on the daily time frame, the key points I highlight are sweeps of weekly fractals and a test or full fill of a weekly imbalance. I don't see any point in going lower. Most often it will just be noise down there, except in rare cases going to the 15-minute time frame to clarify a certain situation. The same logic applies to the end of a pullback. Often, the end of a pullback will also be a sweep of a significant liquidity pool or the filling of an imbalance. Structure specifically doesn't give you an exact understanding of where to expect the end of a pullback or a break of the structure itself. Structure only indicates the trend and its key points. You will only be able to build such expectations for reversal points or pullback ending points by conducting a comprehensive context analysis of each individual situation. Speaking of pullbacks, we immediately need to break down one of the mistakes when traders confuse internal and external structure. Let's break down a situation. On the 15-minute time frame, you found a structural move and expect its continuation, so you open a position. It seems everything is done correctly, but a common mistake is made here, namely, no higher time frame analysis is conducted. What seemed like a full-fledged structural move on the lower time frame is merely a pullback on the higher time frame, meaning it's a move in the internal structure against the main trend. There is no problem trading the structure of a pullback move if you have reasons for it based on your context analysis. Also, besides structural movement, you will encounter consolidation more than once. This can be a consolidation within internal structure, or a consolidation with constant breaks of structure, which is often confusing. When a consolidation forms, I work through the AMD model. Consolidation, oddly enough, is an important part of structural movement. Before a trend reversal, we often see accumulation or distribution, where price builds up additional liquidity to reverse the trend. The same goes for structural movement. You will notice that as a trend progresses, the price often runs out of steam and pauses for reaccumulation or redistribution, where it builds up additional liquidity before continuing the structural move. Structure is just a piece of the informational puzzle provided by the chart. The question is how you utilize this information. And you can utilize this information by trading continuations, or conversely, by looking for a reversal of the structural move. Let me clarify. In any setup, structure is only a part of it. The overall context of each specific situation is equally important to me. Continuation setups include trading in line with the trend structure itself. The point of interest is defined as the zone from the previous higher high to the higher low within a bullish structure, and from the previous lower low to the lower high in a bearish structure. Positions for continuation are sought within this zone. The second setup that interests me the most is the formation of the session model I need within a structural move, where after manipulating session liquidity, my expectations from the structural move and from the movement within session models synchronize. Speaking of reversal setups, first is AMD, which I already mentioned, and the logic works identically across all time frames. And also, looking for a reaction from a sweep of key pools, which was also discussed. When choosing timeframes to work with, I settled on the following. Daily, to understand higher timeframe structure and the overall narrative, as well as key points when working with lower timeframes. 1 hour and 4 hour, to evaluate local situations and to look for setups. But initially, I would advise you not to drop below the 4 hour. The 1 hour contains much more noise and can confuse you if you don't have enough experience yet. And by and large, the 4 hour and 1 hour show the same thing. I only use the 15-minute time frame to clarify a situation I found on the 1 hour or 4 hour. I do not mark structure on it separately. I want to tell you this: there will be no perfect approach. There is no 100% correct and ideal option. The sooner you realize this, the faster you will focus on perfecting one approach instead of searching for hundreds of new ones. Arguments in chats about where the higher low was, on which fractal the break occurred, will go on forever. It's just noise. Your practice is your result. Concentrate on that.